one overarching truth that I found, and I'm curious how you feel about it, that it's not about the money. It's a fun thing to say, and maybe an audacious thing to say, because it's a show about investing, about wealth, about family fortunes. And then I realize any aspect of it you take, it's not about the money. An entrepreneur shows up at 5 a.m. to open the door and welcome customers because they love what they do. And you find people in this business that help others, advise in different ways. And it's no longer the case that they do it just for the paycheck. They just love the pursuit. They feel that they can help. They want to help. And when you think about a family fortune, and I'm sure you have similar observations, money seems like just one aspect of what's actually happening when you're gifting or passing on or receiving on the other end. So when we focus and we think just about the money, so much gets lost. And when you realize it's a gesture, and I bring it up in some conversations, when you leave the restaurant and you leave a tip, money is just a language, it's a gesture, but all you're trying to say is, I really want to thank you for a wonderful evening I get to spend this evening with my spouse. Thank you for the table that you offered, and thank you for giving us the attention and being there throughout this evening for us. That's all I'm trying to say. So take the money aside. All I'm trying to say from the depths of my heart, I want to say thank you. And I think there are those moments where we think the money does the talking, and money explains everything, and money is the heart of it all. It's really not. It's a human experience. The kids want to know that they were loved. The parents want to know that they were needed. I think it's a very human experience. So looking beyond the portfolios that I manage, I just see humans with a heartbeat that are asking to be heard or listened or appreciated or beloved.
Yeah, I think most are driven by creation. I feel like we were all born to create, and the guests that you work with, the people that you invest money for, that they're creators, and that creation, turns into financial capital. And what I've found interesting is that the biggest struggle we have is with our own identity and what happens to us on the journey, on the pursuit of creation. And it can be bewildering, and it can be something that, most of the world has very little empathy for that person. And I think that's what makes this work so curious.
Welcome to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest topic of all, money. How to make it, save it, keep it. But our conversations lead us to an even bigger question, what it means to live a rich life beyond money. My guests share their practices, principles, and evergreen wisdom. I'm your host, Bogumil, author, TEDx speaker, and investment advisor to wealth creators with patient capital and an infinite investment horizon. I work with families and individuals who aspire to grow wealth over a lifetime and generations through disciplined, thoughtful investments in durable quality businesses while giving money meaning. Join me on this quest to unearth and share the wisdom of the ages. Let me share with you the podcast program disclosure statement. Blue Infinitas Capital LLC is a registered investment advisor, and the opinions expressed by the firm's employees and podcast guests on this show are their own and do not reflect the opinions of Blue Infinitas Capital. All the statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. The information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. The information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. None of what you're about to hear is investment advice. Today I'm joined by Dave Specht. He has agreed to turn the tables on me and lead the interview with the questions that you, the audience, has submitted. If you don't know Dave, he's a senior fellow at the Drucker School of Management. He's a two-time author. He created the Generational Wealth Masterclass with Jay Hughes and the Family Business Masterclass with Dennis Jaffe. I'm a big fan of Dave's book, The Family Business Whisperer. He was on the show to talk about it. Scroll down, find the episode, save it for later. He also hosted 50 authors on Authors at Drucker, which is now available on Spotify, YouTube, Apple. Look it up. 50 authors, 50 books. Dave, so nice to see you. How are you?
Good to see you too, and I am excited to turn the tables on you.
I told you that now I'm nervous that I know that I'm the one answering questions. But anyways, the audience sends so many incredible questions, and we have an hour. I want to cover it all, but I'll leave it to you. Let's get started.
Well, first of all, congratulations on 3 years. Weekly interviews for 3 years. That's a lot of dedication, and that consistency, I think, is what's built such an impressive audience. And looking at the questions that the audience submitted, you have an incredibly bright and a sophisticated audience. So congratulations to building an incredible audience as well.
Thank you.
As far as getting started, let's talk about kind of the podcast and kind of the purpose behind the podcast. I'm curious, maybe what surprised you the most about the podcast's evolution over 3 years? If you look back at episode 1 to the latest episode, like what's been the evolution?
It was meant to be a limited time series of 6 episodes. And Jay Hughes, our mutual friend and a mentor to both of us, who has advised many families over the decades, was one of the 6 that I wanted to interview. And Jay said yes. So I got started. But then it kind of took on a life of its own, and almost coming up on 200 interviews and so many conversations with the audience. But what surprised me the most, incredible guests, very deep conversations. But I think at the beginning, I was maybe too shy to think about the audience, who's going to actually listen. And I've been so impressed with the depth, the loyalty, the richness of engagement of the audience. And it's the emails that I receive, it's the messages, it's the fact that other people recommend the podcast to family members and friends, and then I hear from them and they tell me other friends mentioned, so here I am listening and learning something interesting, something new. So I think that really surprised me and touched me. Because on one hand, yes, we spend 60 minutes together with my guest, but then they take the time to write incredible emails and share their story with me. And I'm very grateful for it. So I'm touched, moved, and surprised and grateful that that's the audience that found their way to this podcast.
Fantastic. What difference do you want to make with the podcast beyond the conversations themselves?
I was thinking how when I was a kid, I already had this ritual a little bit of when I found an idea that I found interesting, whether I heard something at school or somebody told me something, I wanted to share that idea and see how people react to it. And I think that drew me to investing, which for me, it's an intellectual puzzle worth solving, and especially the kind of investing that I do, managing family fortunes. But I have those moments where I come across something that's intriguing and I feel like I just can't keep it to myself and put it in a drawer and forget about it. So it becomes an article. But an article it's a fun way to share ideas with the world, but it's not as interactive. But having a guest in the room and then imagining the audience, like sometimes some of the episodes have so many people listening. If I was to host everyone listening to that episode, it would be a huge venue. And hard to imagine the logistics of it all to bring in so many people to one room. And even if we did that, I think not everybody would have the kind of intimate experience with me and the guest that a podcast listener can have. You're sitting in the back, maybe closer to the door. You're not listening. You're not as close to it as the way a podcast listener can be when they take me and my guest for an hour walk and they just listen to us. So for me, the difference, there are certain ideas that are definitely worth sharing. There are certain concepts, principles that I have noticed and witnessed and learned in my professional life that I think belong in more households. I'm sure we'll talk more about it, but you and I are operating in the world of multi-generational wealth, and the challenges, the opportunities, the blessings that this part of the world experiences will be also an experience shared by many more people in the coming decades. We all know that the businesses will be passed on, the family fortunes end up in the hands of the next generation. A lot more people have to know a lot more about the topics that I'm trying to talk about.
Well, I have to tell you that one of the unintended consequences that you've maybe realized is that there's a lot of people that feel like they have a relationship with you and maybe you've never
Mm-hmm.
met them. And then when
Yes.
they write you as a friend. And it's quite interesting. It's quite
Mm-hmm.
interesting.
I,
Um, Go ahead.
I
Go
talked
ahead.
to I talked to somebody this morning who's been listening to the podcast for a while, and I'll share something that I think a lot of people listening can relate to. We're talking, and I realize it's coming up on a full hour, and maybe I talked for 5 minutes, but he's done 55 minutes of the talking. And I think it's a human experience where you feel like he feels like he has to catch me up on knowing him because he feels that he knows me. And that happens to me at events, conferences. It happened to me at an airport that somebody grabs my hand and holds it for 45 minutes and tells me their life story. And I absolutely love it. So if you see me somewhere or if you feel like writing, do it. I'm going to read it and I'm going to reply. But it's very moving, the kind of intimate experience you can create just by showing up every week with a story and something to talk about.
Well, I think it's your demeanor, your curiosity, the care with which you approach conversations draws the audience in in a unique and special way. So that's a gift of yours, and that's probably why people interact with you in the way that they do. So let's go to this next question. What insight from your guests has meaningfully changed how you view life, not just investing? This is a big question.
It is. Just taking it in, there's so many different ideas and principles that definitely got deepened and reinforced because of those conversations. I spent a lot more time with some ideas that maybe I heard once or a few times in my lifetime, but spent a lot more hours with the guests. But one overarching truth that I found, and I'm curious how you feel about it, that it's not about the money. It's a fun thing to say, and maybe an audacious thing to say, because it's a show about investing, about wealth, about family fortunes. And then I realize any aspect of it you take, it's not about the money. An entrepreneur shows up at 5 a.m. to open the door and welcome customers because they love what they do. And you find people in this business that help others, advise in different ways. And it's no longer the case that they do it just for the paycheck. They just love the pursuit. They feel that they can help. They want to help. And when you think about a family fortune, and I'm sure you have similar observations, money seems like just one aspect of what's actually happening when you're gifting or passing on or receiving on the other end. So when we focus and we think just about the money, so much gets lost. And when you realize it's a gesture, and I bring it up in some conversations, when you leave the restaurant and you leave a tip, money is just a language, it's a gesture, but all you're trying to say is, I really want to thank you for a wonderful evening I get to spend this evening with my spouse. Thank you for the table that you offered, and thank you for giving us the attention and being there throughout this evening for us. That's all I'm trying to say. So take the money aside. All I'm trying to say from the depths of my heart, I want to say thank you. And I think there are those moments where we think the money does the talking and money explains everything and money is the heart of it all. It's really not. It's a human experience. The kids want to know that they were loved. The parents want to know that they were needed. I think it's a very human experience. So looking beyond the portfolios that I manage, I just see humans with a heartbeat that are
Yeah.
asking to be heard or listened or appreciated or be loved.
Yeah, I think most are driven by creation. I feel like we were all born to create, and the guests that you work with, the people that you invest money for, that they're creators, and that creation, you know, turns into financial capital. And what I've found interesting is that the biggest struggle we have is with our own identity and what happens to
Mm-hmm.
us on the journey, on the pursuit of creation. And it can be
Mm-hmm.
bewildering, and it can be something that, most of the world has very little empathy for that person.
Mm-hmm.
And I think that's what makes this work so curious.
Mm-hmm.
So
That's a
the next question came up. I guess people want you to get personal here. They want you to talk about your life journey from Poland through Europe to New York, and what inspired those moves, and how did those moves shape you?
So I bring it up now and then because I think it's fascinating, and I also ask my guests about their early days, and I asked you on the show as well because I think there's so much about that period that already shapes us before we go to school, get the degrees, and become who we think we are until that changes. But I was born in Cold War Poland, so I'm 45. I was born in 1980. I got to see the last decade of a failed economic and political system and the massive change in Poland as Poland was catching up from a frozen state to a free market economy. So, for a curious mind, this was a hugely stimulating period of just trying to figure out how the world works and why some things didn't work before and now they do. Hyperinflation, the stock market reopened after half a century. I mean, for a kid, it was just mesmerizing. So I knew that I'll have to do a lot more asking and investigating and reading and studying before I figure out what is it that really happened in front of my eyes. But I got intrigued by the economy, the business, and then eventually by investing. And I came to New York, and I was very fortunate to work for a firm that was not only investing in a way that resonated with me, which was long-term patient, disciplined, value-driven investing, but also they opened my eyes to the fact that there are real human beings behind the portfolios. So I got to meet families that have had wealth over multiple generations, which for me was another revelation. Poland went through World War I, World War II, and half a century of communism. If it wasn't stolen, it was destroyed or it was confiscated. So there was no meaningful family wealth to speak of for most families, except for maybe some items that had a symbol or a story from a bygone era, but nothing that was financially meaningful anymore. So meeting those families and realizing there is a place on earth, maybe there are more, but the US for 250 years allowed people to not only create wealth, which is possible in many places on earth from what I'm learning and observing, but actually keep it, and keep it not over one lifetime, but over many generations. You and I know that it's a collection of very wise, very thoughtful decisions made by not just one individual, but many people time and time again. And it's never done, and it's never won, but it's something that we're earning as we go. And it's not just financially speaking. But to focus on the second part of the question, what motivated me to move, I think it was my open-ended and undying curiosity. And I consider myself a dreamer. I feel like if I come up with something, I'll find a way to do it. So I was an exchange student. I went to Brussels. So I left Warsaw, and in Brussels, I studied with students from so many different countries, the whole globe. And I was very intrigued by them. They were very much alike, but at the same time, very different. And we could learn from each other. So I went to Paris after that, and my eyes kept on, getting wider and wider. The school in Paris was a great experience with, I think, 40% of the students being international, including me. And it was a school that was a French Grand École that was just opening up. So it used to produce all the prime ministers and presidents of the French Republic. And then one of the deans decided that this school, for it to belong in the 21st century, it has to open its doors to foreign students. So I was one of the early waves of students coming from abroad. And we had students from all continents. It was just amazing to sit down and do a case study. And then you realize we're all looking at the same thing, but because of where we grew up, we see things differently. And it's so fun to see, right, how you can enrich the conversation. Anyways, I ended up in New York, and I was very grateful for the experience I've had. And The one lesson that I have is that you don't always have to know what the next step is. I feel like I have this question somebody asked about is there a master plan? I think there is a plan, but plans keep on changing, right? So, and I could talk more about it, but there are so many moments where I didn't get the scholarship I wanted. I didn't get the opportunity I wanted. So I always showed up one more time until another door opened. So I think if there's a lesson there is if the first door closes, look for another one, and then another one, and then another one. And somehow, somewhere, someone will tell you, how about you come over and work for us? And that's how life plays out. So no master plan to speak of, really.
Yeah, I mean, I think that that resonates. It's luck seems to follow the resilient. And so, you could see, I think we're all lucky with people that we meet along the way that open opportunities or show us something that we had never seen before in terms of possibility, but likely it's not the first thing or it's not the second thing. It's having gotten several no's along the way or several heartbreaks even along the way that humble us and that keep us curious and gritty, that then once the opportunity comes, we're more ready to receive it. And maybe we receive it with more gratitude and more intensity. So it's an interesting path for sure.
Everything is a lesson. I actually thought about it, how I really made it hard on myself because I went to one of the best schools in Poland. Had I stayed, I would have had a sure job right away out of school, but I didn't do it. So I moved to Paris where nobody knew my school. But then I went to a good school in Paris and then everybody told me you could have all those opportunities right here, right now. So I made it hard on myself one more time. I moved to New York where nobody knew my school. And on and on and on. So if anything, I made it really hard on myself, but I knew what I was looking for and I found it.
Well, I think that's a pattern. There's a pattern there, and it seems to be working. So keep choosing the road less traveled. I think that's the answer. There's several questions on your investment philosophy and practice, so we'll move to those now. The first one is around, does value investing still have a future in today's world? What do you think?
There were quite a few questions about the concept of value investing, and it's a certain label that I think oversimplifies, but I'm going to take it in a whole different direction today. I think most of us would agree that we grow up with a certain understanding of what value and price is. I used to go to a farmer's market with my grandma, and she's no investor, no value investor, but she would know exactly what she's looking for and how much she's willing to pay and what is quality, what she's looking to buy that day. So for her, it was not looking for the cheapest item. Like some investors believe you have to buy the cheapest stock out there. And it wasn't the goal to buy the most expensive cucumber or carrot. The goal was to stretch the money and find the best quality at the lowest price. And I would argue that works at both ends of the spectrum, both, shopping for essentials and groceries. But maybe I'm going to challenge some ideas that people have. When you buy a luxury good that's priced really high and you feel like this is absurd that it's so expensive, it's just a bag, or this is just a car, and this is just one night at a 5-star hotel. The truth is that nobody actually makes that purchase unless they believe that they receive an equivalent or higher value. So the concept of value is just so ingrained in who we are. We walk around day after day thinking about how you spend your time, how you spend your money, how you spend your efforts. It's always a play of value. So investing is no different. We're trying to get the most value at the lowest price. And when people say value investing as a concept is having a hard time, the philosophy is never going to go away. It might be expressed in very different ways at different points in time. But to capture it all in this very big question, the value and price equation is just a human experience. When you buy a ticket to go on a trip and you say this is an expensive ticket, you wouldn't press buy unless you thought that the value you'll get for that week away is higher than what you paid. We just don't do it. So it might be a different value equation than mine, but you did the math in your head. So a shorter and a different answer to the same question. Value investing is here to stay, and the value principles are here to stay. I think the expression of it might continue to evolve, what kind of businesses we choose to own, but we'll come back to it in other questions. But I just wanted to leave the audience with the idea that we all know what is value, and we all know what price is.
Beautiful. You have a great way of simplifying, and that story kind of makes it visual for me. I love it. The next question is about AI. How do you see AI changing investing, and is the race to AI dominance turning capital light models into capital heavy ones?
So I have to tell you that I've been investing professionally for 20 years. And I was the one that would get the new apps and software at different firms where I was. Some people were more open to it, some less so. But I would be the one at least asking what else is new. And I feel like the 17 out of the 20, the change was very gradual. Some updates, some upgrades, but it was very similar. The processes were very similar across the board, from research to compliance to trading, across the board. But then the last 3 years, I see this massive tidal wave, and AI is a part of it, but there have been a lot of new companies started during the pandemic that are changing and improving different aspects of many aspects of work, but including in the investment profession, that are easier to use, that are available at the fraction of the cost that it would have taken to have the same service only 5, 6, 7 years ago. And I think AI is just this massive tidal wave that I'm observing. I'm integrating in certain aspects of my work. It's saving me time. It allows me to go deeper. And I see it kind of a zoom out to zoom in. There's so much information, so much data. The AI tools that I use, and I mentioned them in other episodes, actually 2 AI services that I use in my practice are sponsors of Talking Billions. So anybody curious, you can look up other episodes and see who it is and why I think they're useful. But what I end up doing is I can zoom out and have AI kind of take a first look at a lot of data, and I can zoom in all the way to the subtle small detail that I can look at myself. So for example, I can pull up even the audio file and listen to an earnings call of a particular company that I own, and I can hear the voice of the CEO tell me something. So I know where to look because of this ability to zoom out. But at the end of the day, and I think that's why people listen to podcasts, we want to hear things said and shared with us in the voice of the author. So I want to hear how the CEO said it. You can show me the transcript, you can show me the summary. But I think AI can help us zoom in on those things, and that's where the value added is. I don't think AI can tell you which stocks to buy the same way. I hope you don't ask AI which, surgery to have and other serious questions in your life. But I think AI can empower humans to do better work. It's a tool that can be used, but it's a disruptive force, and I'm curious how it plays out. And I think, speaking of the capital heavy businesses and all the change that's happening, I would pause for a second and remind us all, including myself, how new of a phenomenon it is this time around, at least, and how the first wave of businesses that we see might be just that, the first wave. And I'm very curious because I'm thinking of the internet bubble and internet wave that we witnessed when I was in college. And the businesses that people were talking about, a lot of them are not around, or they really had to reinvent themselves. So I would take that as a lesson from history and think about what AI can look like in 3, 5, or 10 years. And it may create businesses we can't even imagine today. And the business creators, we talked about creation today. I think what AI does, it gives you the power to do things that you might not be able to do, not being a software engineer yourself or a designer yourself, but it extends your abilities. So then you hire help, but you can do so much on your own. And I think I can only imagine what somebody in a garage right now as we speak is doing with AI that you and I can't even imagine. So I'm very, very excited about what it can do, but I'm very aware that it's taking some jobs away right away, including, well-paid and roles that might be replaced. And I think that's something we should pay attention to as well. I don't have an easy solution. I think we've been through revolutions like this before, but this one it's happening at a whole different pace. I'll leave it at that.
Yeah, I mean, 5 years ago, even, we didn't see a lot of these things coming. And I advise three different AI companies right now. One is,
Hmm.
doing multilingual broadcasting live. Another is, developing faith-based indices. I mean,
Hmm.
because of the horsepower of AI. Another one is, an assistant that financial advisors are using. So AI is definitely disrupting, and I think we can be excited about it. We can be afraid of it. We can be all those things. But it's an interesting time to be alive for sure. The next question is about compounding. How do you think about quality as something that compounds in companies and in investors themselves?
Well, here I would think about a perfect business you would like to own, whether it's a public business or a private business. It doesn't really matter, but I operate in the public market. And you want this dream business to be good, great, and becoming better and better. And in some instances, you see how just because of the model and the nature of it, it improves and improves and improves. And any business that can continue that process is enhancing its quality, perceived quality to both the shareholder, but especially to the customer. Without the customer, you don't have a business, right? So you need to have a company that's, you can see that day in and day out, they're doing something to make the service better. And maybe that's something that doesn't show up right away in any financial statement that you might read or an annual report. But interacting with the business and reading between the lines, you realize they're doing something unique. And there are those all kinds of things these days, like the platform and the network and the scale, adding another store, making the business even better because they have the pricing power and they can negotiate a better deal that benefits all the stores in the network, and on and on. There are many different things. But if there's a certain culture, and it's very subtle and it's not very easy to pick up on, then every employee from the top to the bottom is doing a better job and improving that service. And that's the quality that keeps compounding. I'll bring up a story that one of my guests brought to my attention. I've studied Napoleon on many occasions and the history and the battles. Napoleon had an incredible record of winning battles across Europe. He was really good. Also, Europe was not prepared for an invasion like that. But he did something that really struck a chord with me, and I if I knew, I wasn't aware of it anymore. Ritavan was the guest. He talks about data, but he told me the story how Napoleon had always an illiterate older foot soldier next to him.
Hmm.
So when he had an order to pass on, he would tell that order to that soldier and ask him to say it back. And if he got it right, Napoleon knew that he phrased it in a way that can be repeated 1,000 times, or sometimes tens of thousands, and will make its way all the way to the soldier that's there at the end of the forest, actually shooting at that moment. And I think it's such a powerful image because I think companies can think about how they compound quality throughout a much more complex system sometimes. 100 countries, 50,000 employees, 20 product lines. How do you make sure that the Napoleon at the top shares an order with the executive right next to him that goes all the way to somebody on the ground, a barista serving coffee, and that barista knows exactly what the message is. We're making sure that this customer has the best experience, and this customer walks away happy and comes back. I think having that kind of a mindset, and maybe Napoleon is a good example to think of it, I think it can make a big difference in businesses.
Very interesting story. So now someone wants to know about some of your personal criteria for putting a stock on your personal watch list before you buy. What are some of those criteria you use?
So I look for good businesses with good management and good prospects. I'm oversimplifying here, but I'm looking for businesses that I can own and forget about. And the list really eliminates a lot of the investable universe to a much shorter list. And it's not that I screen for those companies every single day. These companies I find over time, and they make their way to a certain watch list. And it's a wish list in a sense that I don't necessarily buy them the minute I find them. But I'm waiting for a break. And public markets are very unique because you have this anonymous crowd that trades shares every single day, very different than a private market. In the private market, when you have a business that has a weaker quarter, the family that owns it is not running around trying to sell it the next day. They're trying to figure out how to make it work better. But in the public market, you have people with not a very tight grip on their shares. So they basically sell the shares when anything goes, it's not as good as they thought. So I'm looking for the businesses I describe, but when the stock is down, cheap, and out of favor. And just as an exercise for this audience, anybody that's curious, if you take any business you'd like to own in the public arena and look at the price of that stock, even over the last 12 months, I think a lot of people are hugely surprised that even the businesses that are in the headlines traded in a really wide range. If you can find what you want to own, and if you can wait until the price makes sense, you'll surprise yourself how many incredible businesses become available at lower prices in the public markets again and again and again. Fear and greed is a human experience, and as long as the markets function the way they do, people will always get too excited sometimes and panic too much at the other end. And if you can just find the businesses you want to own and wait.
So this next one is a connected question. How do you think about investing in market tops or the risk of waiting too long? You know, people that have cash on the sidelines and don't really know what to do now. You know, what are your thoughts there? What guidance?
So there are a lot of paradoxes around this phenomenon because on one hand, I see investing as a lifelong pursuit. It's not something that I think you should do only when it feels right, it's comfortable, or you just heard about it, or your neighbor told you that they're getting richer than you are. That's probably not the time. It's something that you need to do, if you choose to do, on almost regular basis. And I'm not saying you have to do all the research and you have to do all the work. I think it's absolutely fine to ask for help and guidance. There are enough very well trained and experienced people that can help you on that path. But if you see investing as a lifelong pursuit, the market tops are not the biggest worry. The worry is to have a plan and see the urgency. It's almost like that Chinese proverb that the best time to plant a tree was 20 years ago and the second best is today. So if you haven't started saving, start saving today. And if you feel that investing belongs in your life and you haven't done it, start today. But when I say that, it doesn't mean take all that you have and put it in a single stock and hope for the best. Have a framework, have a system. And I mentioned how, there are at least two kinds of investors. There are those that invest because they save a little bit over a lifetime. And they have some advantages because they can gradually put a little bit of money. We have 401ks and other ways to automate it these days. But you don't have to really worry too much if this is the market top or the market bottom. You have a system that takes the guessing out of, buys through it all. Actually sticking through the hard times sometimes, even with a system, is hard enough. But the clients that I work with, usually they're faced with a lump sum one way or the other. It might be already invested and it's passed on, or it might be because of some event that the money becomes available. But they're facing a whole different situation because they know that there is no dress rehearsal. This is it. And there's a once in a lifetime inheritance coming or a liquidity event. And they don't really have the time to practice with a smaller amount. Actually, there's a beautiful book that you and I might have talked about, Brewster's Millions from 100 years ago. It's a tale of it's a family feud. A young man in New York receives the first inheritance and he's required to lose it, all of it, to get a 10 times larger inheritance from another family member. It's a beautiful book, very innocent, but it's loaded with principles, ideas, and a backdrop of what it's really like to inherit money. And he ends up succeeding, losing, and he's really ready
Succeed.
for the second, if that's how you define success here. But he's ready for the bigger inheritance, and I don't want to give too much away, but he's he's they can't find him because he's not even interested in it anymore. I think there's a bigger lesson there. But the opposite example of it, I've been in rooms and I've been part of conversations where a family might have eventually, through some decisions, they parted ways with the inheritance they had. And they make a phone call to the advisor and they ask, is there another trust? Is there another pool of money coming their way? And it wasn't me, but there were colleagues that I worked with that had to take that call and explain that this was it. This
Mm.
wasn't a dress rehearsal. That's not Brewster's Millions, the novel. This was it. So if there's nothing left, then the lessons remain, but there's really nothing more to manage. Maybe there's a bigger idea here that if you want to prepare the next generation, maybe let them practice with a smaller aspect of the business if you're running a family business, and maybe a smaller portion of the family fortune before you put them in front of the big wheel here, where every decision has its consequences. And there's a certain sense of urgency that some decisions have to be made right off the bat, and there are enough people out there that are very competent to be by your side.
Yeah, I think it's very interesting, correlating that with, a family I'm working with that is getting ready to have an incredibly lucrative liquidity experience during a market top, and so it's like, okay, now you're gonna have 150 or 200 million fall into your lap. You've never really invested outside of your business. You've always been
Mm-hmm.
most comfortable reinvesting in your business because you understand it, you know it. So, the question was, what would you do? How would you allocate? And the answer was they would basically go back to what they knew. So it was like, well, why are you selling your business in the first place? So it's so few are prepared for what that
Yes.
experience is going to feel like, and I mean that's the need that there is for an advisor to help them navigate the emotions and also to build a system that they can be accountable to and hold firm to when it's difficult.
I find it very empowering to think and realize that experience, like many human experiences at that moment, may feel like it's only happening to me, and I'm the
Hmm.
first person on this planet that this ever happened to. And then realizing, no, this is actually something that's probably happening to many people as we speak, and many people have gone through this, learned from it, and had people on their with them to help them through the process. So you can learn a lot from what others have done and how they went about it. You don't have to make all the mistakes on your own the way Brewster did in the book. But I think that's, yeah,
That
it's a
shift,
very
that
humbling.
shift though from controlling everything to then kind of outsourcing that control and advice to an
Very hard.
investor on your behalf is really challenging for them.
Hmm.
Really challenging.
It can be a gradual phase in, phase out, a
Yeah.
moment of there is somebody else in the room. They can listen. A lot of the work that I think you and I do is listening. So just being present in the room, and then whenever you get asked a question, you can chime in. I think that's the best way to gradually get comfortable with the idea that there is somebody else that can help, because they're
Hmm.
immersed day in, day out in what you're experiencing right now.
Yeah.
They see it happen again and again. And it's not just the technical financial decision, we're going to build a portfolio of stocks, but human empathy of knowing what is it that you're going through and how I can help. And I think you would agree that a lot of the conversations are, yes, about the technical side, we're going to do this and that and allocate this and that. But at the end of the day, there was a human being with a heartbeat in the room that held my hand.
Yeah. Well, even that question of how much cash should you keep so that you just feel comfortable enough to hang in there on the choices that you did
Mm-hmm.
make, with investments. So it is it's such an interesting experience. And like you said, you know, it's not all about the technical. It's about learning the human being you're working with helping them
Yeah.
navigate their own fears and helping them uncover their desires. And it's an incredible thing to be asked to go on the journey with someone. It really, really it is.
I share how
Oh, go ahead.
I came to investing for the intellectual puzzle that proposes, but I stayed for the people that I get to work with.
Mm.
I I have to tell you that it's really wonderful to be able to help and to be a part of incredible journeys that people are on. Yes, there's the stock picking. Yes, there's the portfolio management, but they're just wonderful human beings. And if you can do a little bit to make the experience more positive for them, I think it's a wonderful place to be.
Absolutely. So you're a seasoned investor, but you're not exempt from being tempted. How do you personally navigate the temptation to follow market trends when it seems everyone else is doing so well?
It's a fascinating question because we're all made in a we have a different makeup, and I personally don't really respond well to FOMO. I just don't, and I still don't entirely trust myself that I won't give in to something exciting. So there are parts of the market that I choose not to participate in. It's kind of a guardrail for me, and I focus on the public markets for many reasons, but one of them is I sat in rooms where venture capital, founders were pitching their ideas, and I couldn't tell them apart because they all sounded incredibly exciting to me. The founders are just intoxicating when they talk about an idea. You can't really find anything wrong with it apart from the fact that the product doesn't exist. You haven't found a single customer yet. And the only money you have is whatever you got in initial funding.
Mm-hmm.
And here we're, flying on a dream and a story. So that's why I don't participate in venture capital. I have friends that do, and they're more able in that department than I am. In the public market, I have proven businesses that have been around, and I'm looking for businesses that I have reasons to believe that they will continue to become better, and I want to pay a price that makes sense. There are moments that never end every few years where we have something that it's just too good to miss. And somehow, I don't know if it's my contrarian bone or my upbringing, but whenever people get overly excited about something, I pause. And it applies also when I travel. I like to go places on a shoulder season or off season. I don't want to be there when everybody's there. You won't see me at the grand opening of any major store. I'll go there the next day when it's just me. And it applies the same logic applies to stocks. I remember I would go in New York, they host IPO lunches when companies go public. And some of those IPO lunches were so oversubscribed with so much interest that I couldn't get in, or I was the table by the bathroom all the way in the back. But I was in the room because I wanted to hear the story. So I would write down the name and I would take my notes. And I never bought a company that was listed like on the listing day or even week. If I bought them, it was usually 6 months later when most of the people that were so excited about it were already out of the stock. And there were so many IPOs. The term is not very kind, but it's a busted IPO, which means it hasn't done as well as expected. That's where I get intrigued because I feel like there is still a story to be told, but there are fewer people listening. And the public market is an incredible place where short-term thinking can create incredible opportunities for long-term investors. And I don't see that changing. All the things we talked about, even AI and the speed and the tools, I think it can, on one hand, empower people that want to do the work and do the research. On the other hand, I think it's an incredible fuel for short-term feedback loops and a quick reaction to the news that this is bad, I have to sell, this is good, I have to buy. And if you can
I could
pause
not agree more.
There
I
you
could
go.
not agree more. Yeah.
It cuts both ways. I think it cuts both ways.
For sure. So I think someone is fishing for a silver bullet on this next question,
Yes.
but we'll present it anyways. What's your investment idea for the next decade that you're most convinced about?
I might disappoint with my answer. It's a fascinating question because investing is all about optimism and believing that there's a future. When you really think about it, the only reason you would buy a business or a stock is because you think that there is a future and because you think the future is better than today, or at least the perception of it, right? So this huge embedded optimism about the future in the pursuit of investing. And you wouldn't leave a family fortune if you didn't expect that there is a beautiful future for your nephews, nieces, kids, relatives to be living in, right? So that's an inherent part. Now, I'm not going to pinpoint any individual segment, but looking at the whole picture as a lifelong pursuit, we're trying to find a collection of businesses that make sense. And it's not really rocket science to figure out the businesses that are doing something right. I think the biggest challenge is not trying to guess the future, but if you found something that really makes sense, to hold it long enough to matter. And I want to emphasize that because, I've done 200 interviews and many conversations that were not recorded with many people that follow the podcast. And I have to tell you that I've heard enough times how somebody bought the right stock at the right time and at the right price. There are people that bought Amazon when it collapsed after the internet bubble burst. And you would think that these folks are some of the richest on the planet. They're not. Why? Because 6 months later, 6 months later, or a year later, they sold it. I had somebody tell me a story that he actually called and interviewed people that were quoted buying Amazon after the bubble burst, when the stock went from 106 to $6, 106 to 6. And he was curious and asked them, so what happened? And they said, well, it doubled and I sold it. Well, we know that Amazon went from the $6, $7 range to wherever it is today. And had you just held it,
yeah, that's that long-term belief. Long-term belief in something is crucial, I think, to keep you in. Yeah.
The inaction in the world that's demanding action might be the hardest thing to do, but the biggest value added.
That's a lot of wisdom in that one right there. That's clippable. We'll clip that quote. Let's go to client relationships and wealth management. There's kind of a bucket of questions here. Yeah. What do you feel like are the top challenges your wealthy family clients typically face?
It's a sense of excitement and worry and urgency and responsibility all at once. And I'll tell you a story of a fellow investor who manages money now for other people, but started with managing his own family money. And he told me something that really struck a chord with me, and I think a lot of people listening will relate to that. He told me that there was this moment when his father entrusted his family fortune to him to manage. And he told me that he was shaking in his boots, like he felt the responsibility that comes with it. So I think that that moment of realization that this is the money that you cannot afford to lose, it's a moment when you realize what a huge responsibility it is. And asking for help, taking your time, going slow, maybe not even sharing the news with too many people at first, it's very helpful, I think, can send the wrong message. And giving yourself time to regroup, think about it, take a pause. I've heard from so many families when they ask me about, just what's the immediate advice, and I tell them to go slow. 2-3 years later, they tell me, I remember you told me to go slow, and that was such a simple idea, but there is no rush. There will be people calling you. There will be people reaching out to you, pitching all kinds of products and strategies that will help you double the money in 6 months. I think you and I know that these are not the calls you want to take. You're trying to build relationships with people that can be on this journey with you for the next few decades, whether it's your lawyer, your advisor, your accountant, your business expert, whoever it is, you're building relationships. One thing that actually Jay Hughes told me, our shared mentor, he said, when the families pass the wealth on, what's inherited, yes, it's the financial wealth, but it's also the people around it that enable that family fortune to be where it is. And I think it's very tempting for the next generation to say, I'll start fresh. I'll find everybody new. Well, that's one way of looking at it. But think about it that the reason why there is any wealth for us to talk about today is because a lot of people made some really good decisions, including the people that are in the room as we're talking about it. So maybe give them some credit for the work that's been done
Yeah,
and see who among these individuals can be very helpful on your journey before you try to change everything, which is very, very tempting to, and I'm sure you can relate to that too.
yeah,
Every single new generation, I'll change everything.
for
Maybe,
sure.
but for a moment, just see who's in the room, why are they here, and how they have helped you already so far.
Yeah, that's good advice. Next question here is who benefits most from what you do, and how do you know it's the right fit?
It's a certain intangible, almost readiness to think in decades, or as Jay again would tell us, in centuries. But it's not something that I can convince anybody of. It's something that they
Mm-hmm.
come to me and they have this realization. And I've had clients that had this understanding that the money that I manage, it's in a way no longer theirs. Like in legally might be theirs, but it's meant to be for the next generation. And I'm not saying that everybody has to think about the next generation. I think a lifetime is long enough. What I would emphasize is once you extend that time horizon, the quality of your decisions, the quality of the questions you ask goes up so much that you differ in a huge way from an average participant that's thinking in terms of 6 months, maybe a year. So you yourself will benefit in this lifetime playing this, what I call the infinite game, because a family fortune is an infinite open-ended pursuit. So don't think of just the next generation, but also yourself. You will benefit from it. But if there's this moment when people can start to think in terms of decades, that's very helpful. And second thing is, it's a certain realization that it's the money you cannot afford to lose. It's the money you can't make back. And I had many lunches and dinners with entrepreneurs that started a business and they're ready to start a second one. And they almost have this conviction, which I admire, that if they lose this, they'll make twice as much next week, or I mean, in a year or two. And it's very hard to offer any advice from the place that I'm coming from to somebody that thinks that this money can be lost, we'll start over. I think there's this sweet spot where they acknowledge that this money should not be risked to the point of losing it all. And then we have a fun conversation. Decades long investment horizon and a realization we really don't want to lose this money.
Yeah, entrepreneurs are tricky ones to work with, especially when they've just had a liquidity event and they feel like,
Mm-hmm.
you know, everyone's telling them also that they're the smartest person in the world and they feel like things have happened well and that they could remake their success. And typically, I would guess that your primary, best candidate to work for you or with you is someone that has had that experience and then has
Yeah.
tried to do something else and has learned through hard experience that, you know, what happened once was kind of like capturing magic.
Mm-hmm.
And this second wave of work may not be the same magic or it may not even be magic at all. And
Mm-hmm.
that's a group that's probably felt the realities of life more. And I would guess that group is more ready to take a disciplined approach and work with you. But that's just my perspective.
100%. Acknowledging the fact that you already have the capital, which is a challenge for a lot of people because they don't have sufficient capital to think about long-term meaningful investing yet. They will eventually, but you have the capital, so you have the time. And even if the rates of return don't compare with what you experience creating this wealth to begin with, they can still double that fortune again and again and again. And I've
Yeah.
seen ancient statements pulled out, and people showed me how family fortunes have doubled time and time again. I would emphasize that when some people think of a family fortune, they think that you just collect the income and you don't care about the growth. That's not true. The truth is that purchasing power of the currency keeps falling. You have to grow the wealth. Family members keep on getting added. The families grow and expand. The needs evolve and change. And the money has to grow. So it's not that you're sitting on laurels here and collecting a coupon. You're still investing that money in a very productive way, but you have an advantage of the capital and the time.
Yeah, I wish the expectation that investing should be somewhat boring and not have peaks and high peaks and low values from an emotional experience. But,
Yes.
with the news cycle and with everything that's coming all the time in terms of news, it's just so hard to train yourself to have a disciplined approach that is somewhat boring. Um,
I
and it's
like
not boring
boring.
to you because you're looking at things all the time but for the end investor, I
Yeah.
wish they could accept that it was not going to be exciting.
Hmm.
I don't know if that makes sense,
No,
but
that's fair. I think there are many places where you can find excitement. I think opening up the statement in an envelope or these days in an app, that's not the place where you want to be excited in either direction, right? So you kind of want to
right.
know what you own, why you own it. Of course, the market will go through its ups and downs, but you don't want to have some binary investments that it could be zero or a
Yeah.
billion. I think they can keep you up at night, and the families I work with, they like to sleep well.
Yeah. So you discussed the phenomenon of invisible wealth, but share that
Hmm.
children should know. How do you navigate this without hampering their ambition? So this is a question about kind of transparency of wealth.
Yeah. I brought up the topic of invisible wealth, and somebody must have read the essay. I highly recommend it because I was playing with this idea that you could be at a dinner table with friends and nobody knows who is the richest person at that table.
Mm-hmm.
It's a different world we operate in than 100 years ago, that if you had the largest brewery in town, everybody knew who you are. If you
Yeah.
have the largest stock portfolio that's been compounding over 50 years or 30 years or a decade, you might have ended up the richest friend in the circle. Nobody knows about it. But the catch is that probably your kids don't know about it.
Mm-hmm.
And I had clients and I have audience members that called me, and it took them decades to share it with the family or the friends or the kids even. So with the kids, I think what I saw in my experience watching clients is they have to know something at some point. And I think that going to an extreme on not telling the next generation anything until they legally inherit or they have rights to that asset, I think it's just a dangerous place to be, because thinking of what we mentioned before, giving and receiving, it's a process. It's a way to prepare the next generation. And I think we're learning and growing into that new reality. Jay talks about integrating this phenomenon into life,
Mm-hmm.
and I think it's not something you want to surprise. So I would flip it on its head and think of what is it that you think would that would put your family fortune in danger if you did that. And one of the things is don't tell anybody, and then pass away. And at 65, when your kids are, older, you surprise them with an inheritance. That's not what you want to do. And I've heard those tales of 20-year-olds receiving a surprise inheritance. I'm sure you have too.
Yeah.
That's definitely not. So I mean, maybe a better way to go about it is think of what you don't want and don't do that.
I like it. That's good advice. We only have a couple minutes left, but there's a few questions here with regards to life
Let's go
values
the
and
extra
legacy.
minute. Yeah, let's go
Okay.
the extra few minutes. Yeah.
All right. So this first question is, how do our fears shape us, and what keeps you grounded when pressure peaks?
It goes back to the quality of sleep. I think fear is natural and needed. I think we all know that it's helpful. I think the reason why we're still here is because some of our ancestors were scared of the noise in the bushes,
Sure.
and they just didn't venture. So you and I are still here. And I think the markets are that kind of a place that, fears and greed come up. So finding a way that you can interact with the phenomenon of the stock market as a place where you can grow and compound wealth without exaggerating those fears. And to me, it's eliminating a lot of the investments that can keep you up at night, and also having some help with it. There are studies that have been done that having an advisor that takes your call on a tough day and walks you through it adds in this exponential intangible value. And it's on an easy day, everybody is fine, but there are days that really matter. And I took calls in March of 2020 where people panic. I had friends and colleagues who panicked, and I took calls from clients who told me they just wanted to hear my voice. And I know that in moments like this, you have to be the captain of the ship and say, this is what we have in the portfolio. That's why we have it. This is the course we set. We're going to be buying a handful of new things. I'm going to get back to work. All is good. And you need that. And that has an intangible value and a bit of hand holding. I think that's the reality. And let people worry for you.
I think the anxiety comes from the lack of a structured plan. If you're
Mm-hmm.
looking to your advisor to be a magician, and finding things that no one else can find, maybe that's not the full scope of what you actually need, if coming into the relationship, you realize the advisor is there to put a structure in place, put a strategy in place, and then keep you accountable to what you said was going to be the best thing for you and your family, that's feels like a more holistic, sane approach that, would lead you to rest easy even when things are chaotic in the world. Um, there's a question here. What are let's see, let's go to this last one. Many of us aim for a quote mosaic life, blending work, family, and meaning. How do you
Mm-hmm.
personally design your days to sustain curiosity and purpose? Man, this one is like
It's a
personal.
big one. There were quite a few questions that fall under the same category that kept coming about, trophies and accomplishment. What are you proud of? And I asked my guests about their definition of success. There are moments in my life where I thought it's all about the titles, becoming a partner at an investment firm. Then everybody was comparing their offices, who has a better view, who has two
Yeah.
screens, and on, who is closer to the CEO. And there are all kinds of physical, almost expressions of success that I found alluring. And then I realized maybe that's not all that I'm looking for. Charlie Munger, the famous investor, said that, we're talking about investing. He said it wouldn't be enough of a life if it was all about buying stocks, putting them in a vault and waiting for them to appreciate. So as much as we talk about money here, I said it's really not about the money. It's about finding something that you love doing, something that gets you out of bed in the morning. You want to take that one more call. You're looking forward to meeting that client or a prospect. You see a way that you can help. And then finding, I love having those unstructured hours in my day where I'm lost pursuing a new
Mm.
curiosity. It could be a book that has nothing to do with anything, but it inspires me. Or it could be a project or a solution or a problem I'm trying to solve for a client. So it's a blend, but I think overarching truth, and I think a shared value for a lot of the guests I've had on the podcast, is that you are the boss of your time. You decide what you do. I think that's the biggest win in life. Not really the number in terms of a financial success, but the fact that I will do today exactly what I was looking forward to do. I'm going to record with Dave. I'm going to take one call from an audience member and I'm going to read in between. You can't put a price tag on it. So that's the kind
Yeah.
of life that I'm very grateful that I get to live. It wasn't always the case. There were times when other people were deciding my schedule, but now I do what I love with the people I enjoy spending time with. And it's a very full and enriching life for me. And I have fun with it. And 200 episodes, 3 years, but I'm feel like I'm just getting started. I think I have more questions than answers, but I appreciate all the questions that everybody had today. And I think this was the last one, wasn't it?
Yes, sir.
If anybody feels that we haven't covered something that you send in, I want to mention that just follow up with an email. And if you emailed and you feel like you need a better answer, just let me know and I'll do my best. I received so many wonderful emails, but I feel like we did our best today in 60 some minutes to cover most of it. But some of those topics, I think they could turn into an hour-long episode on their own. So I feel like we did our best, and I really appreciate you, Dave, being so thoughtful and sharing your perspective, because you've worked with some wonderful families over the years and you've seen things. And I think these are lessons worth sharing.
Well, the world needs more steadying voices like yours. So keep up the good work, my friend.
Look up Dave's work, Dave's books. Look up the authors at Drucker, which is available in many places these days. And you get to listen more of Dave's voice, which is very calming too. I think if we didn't put somebody to sleep today, we didn't accomplish our success for the day. But it was exciting for us. Thank you so much.
Yep.
You were listening to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest subject of all, money. But our conversations lead us to an even bigger question: what it means to live a rich life beyond money. If you enjoyed the show, please take a moment and follow, subscribe, rate, and share with friends and family. We rely on word of mouth to promote the show. One click for you means the world to us. Thank you. Until next time, your host, Bogumil Baranowski.